And what's in it for markets? What's in it for you as an investor? Who better than Samir Arora, founder of Helios Capital, from his vantage point to talk about all of that? Samir, we don't know which way this is going to head. Like you said, ye kya cheez hai bhai? Only time will tell in retrospect. But till then, what do? Just keep calm and order in food?
That, of course, you should always order. But
We have two
secondly, I think,
options only.
there has to be a measured bet here that A, is this going to be long term? Because if this is going to last only a few months and then a deal is done, like it has been done with Japan, with EU, and maybe some other one or two others, where it started with an aggressive number from Mr. Trump, then all this effort of being bearish will not be worth it. Second is that although India may have to figure out if these things really last, that what are the new friendship circles. But from a stock market point of view or from an economy point of view, there might be micro issues on some stocks here or there. But at a macro level, how can it matter so much if the entire uh, US, I mean, Indian exports to US are about 2.5%. Now, unless this expands to services, unless something happens which threatens the rest of the market economy, whatever, or more of the market and economy, we have to say yesterday Switzerland reacted to 39% tariff by closing down 15 basis points. And today India can react by being down what it is now 0.4% or something. So we have suitably reacted.
That's the thing, Samir. We're down 0.5%, 120 points on Nifty futures today. But the fact is that we've had a rough July. We've lost almost 900 points on the index, and the consistent FII selling. Have the markets somewhere adjusted to the worst, you think?
For this month, yes. But if you see from Feb 1, we've got inflows. And this month, the initial selling could not be attributed to US India issues. That was related to the fact that we may have had poor results in IT and maybe in some large consumer here or there. And even the banks did not really do so well. So that is more to do with us. If you want to consider the US India impact, that may be the last few percent, maybe 2% or something.
So as an investor, Samir, what do? It's such an unknown black hole that you're staring at. You don't know which way this situation is going to pan out. And like you said, more importantly, for how long this stretches, right? I mean, with Trump, even the deadlines get pushed back like anything.
Exactly. So you don't react. As I tweeted, which I think you missed my main tweet, that over the last 30 years, I've seen plague in Surat to Asian crisis to Russian crisis to global financial crisis to 9/11, attack on parliament, so many things. In that context, this looks for us relatively harmless. I mean, it is harmful, but not of any extent to which that you can react in a significant way. Now, we also have one or two of these textile apparel exporters. Now, they are down on what to do. But other than these one or two, if somebody has in a portfolio 3, 4, 2%, that you have to wait and hope that this also works itself out, because in the end, these things don't last and these rates don't last. But otherwise, you move on. Move on means you don't have to buy today if you don't want, but generally, it's okay.
वैसे I started my question with ये क्या चीज़ है भाई. I very well read that.
That's the one I could, because you had started and then your volume came up. By that time, I missed that. Yeah.
Okay. Happens. But so, Samir, I mean, what do you do as an investor? You can only work with the knowns, right? So let's talk about earnings. We've not seen any big upgrades also come in. Earnings softness or neutral so far that we've seen from the earnings, barring a few odd, dhamaka earnings here or there. It's largely been pretty lackluster. How do you deal with that, and how do you readjust your portfolios to that?
So you deal with that by not having so much of your portfolio in stocks that have lackluster, and you buy some of the ones which I have these 100% growth guys. Not all of them, but 10-20% in that, and you have to have a mix of stocks, because the issue is that if you look at the large three pools, then the IT pool is not doing well or growing, maybe 5% or less, and the consumer guys will grow 5 to 8, 9, 10%. and the financials will grow 8-10% to 15%. So as of now, all the three are not of sort of, no one is pulling up the whole group as in the aggregate numbers, but plus minus 2-3 quarters, that should be okay. So in the meantime, you lower your expectations and hope to make, I say 10% annualized number, because earnings growth in aggregate is plus minus 10%. But be confident of the fact that over time India will get some more flows than they have recently, because there is a clear trend of diversification away from US. And looking at the index, different indices, there is all country world index and then the regular MSCI world. Basically, US weight in those is very, very high. And for the first time in many years, you can see it in world ex-US ETFs and in emerging markets, and also that the flows are going out, or that US exposure is becoming a little less, maybe with new money or old money going out. Plus, also the fact that after many years, the world ex-US has outperformed US. And you can see it in the fact that people are worried about currency and the fact that they are hiding in gold, and then they are reading books like I have, written by Ray Dalio, on how what happens when countries go broke, and basically he's talking about US. So for whatever reason, there will be slight diversification or a lot of diversification away from US, and even a small div- diversification will help the ex-US world, because that world is much smaller than US. And in that, we also have a valid claim to get some flows, plus minus a few months here or there. And we are already getting, by the way, from February 1, we still have positive flows.
But Samir, the bichara Indian investor, he doesn't have the option of, investing all around the world. What does he do? Sit on some dry
No,
powder,
since
be
he has
all
no
invested
option,
in right now?
since he has no option, his option is equity, because he has to compare it with his alternatives. The alternative is Indian debt. And the game you have to play is the spread. You don't make an absolute, say, previously we used to say that the market will make 14-15% because that is in line with the corporate earnings. But at that time, that means the economy is doing well, and the interest rates, if measured by 10-year government bond, was say 8-9%. So you're making 5% more. And now that instrument is giving you 6.3%. So you will make 10, 11, 12%. All these things are consistent with each other. That because economy is slow, because interest rates are slow, because nominal growth rate therefore is low, therefore you will make on sort of prima facie lower nominal rate, but you have to compare it to interest rates. We say the same thing to foreign investors, that previously the index, not us, we used to outperform and hopefully do, but that the index will give you 14-13% and you will lose 2.5-3% on currency. So you will make anyway 11% only types. And now we say you will make 12% and lose 1% on currency, or make 11% and lose plus minus 1% on currency. So it is somewhat same for everybody. But the whole game is of relative to your choices, and the choices are also, so the spread is there.
But just when you talk about pure equities, Samir, where are the choices where there is growth visibility, there's leadership, and there's valuation comfort?
So first thing is, in aggregate, the earnings are growing 10% or 9%. So that's why I'm saying in the beginning, from now to year end or maybe even to March, you cannot make annualized more than that. And in that, you don't have to. Why should you need this thing? The earnings growth should deliver to you on the, and also on the back of the mind, you should have some expectation that these things will improve and that this is not the normal. It will be 2-3% higher because A, consumer is particularly less. I mean, growth is less, and that with interest rates, lower interest rates, and maybe festive season, monsoon, and generally government putting some more attention to it, or cutting GST or cutting whatever, will help it 1 or 2%. And normal cycle is that the economy, whatever anybody does or does not do, in rupee terms will grow around 10%, which is say 6.5%, 6.7%, 6.3% GDP growth, and 3 odd percent inflation. So anyway, economy grows 10. So it's not something wild. The second is the financials and particularly the banks, which because of the 1% cut in interest rate, therefore, their names go down a little bit and therefore you see lower profit. But as soon as this thing has been passed to the public in terms of lower deposit rates and all, then they will also go back. It's a thumb rule of life that they will grow 1.2, 1.3 times GDP nominal terms. So they'll grow 13%. They've been doing it for 30 years. They're not going to stop now. And IT, either the stocks have to fall more, they have to go below average valuation, or maybe they can grow 2 3% more, but you will tend towards 12ish kind of earnings growth in aggregate. And that is where we will be till some big event happens to take it much higher.
Interesting. But where do you see the next profit pool getting created? I mean, banks, of course, are an obvious choice. What outside of that?
So as I said, these three pools are basically slow growth, which is financials, consumer, IT. Therefore, for big pools, you have to look at companies that are changing the habits of consumers or even of companies, not relying so much on the end growth of consumers. So I say if if you are only changing the habit but the overall pie is the same, there are many companies. You can change the habit of how you buy groceries, you can change the habit of how you eat food, you can change the habit of how you pay for your transaction with cash or with a app. You can change whether you are going from organized unorganized logistics to organized logistics. You can go whether you're buying insurance from an agent or online. These are the things, and so you know all the names, and we have all of them, and they're all growing, as you can see, 50, 80, 100, 150%. But you don't overdo this, because obviously these are high growth but also still setting themselves up in terms of businesses and just breaking even. But cumulatively together, we have some 15, 18%. But they help me in two ways. They make me outperform, and second, they help me irritate others.
By what? The food that you're ordering or how swiftly you're paying
Because
them?
people get so bugged that, oh, these companies don't make profit, as if only they have read Warren Buffett and every rest of the world, which today somebody bought 3,800 crores of the stock, and this,
Yeah.
oh, it doesn't make profit, as if these guys who bought 3,800 crores, I didn't buy because I bought it at maybe 40% of this price, are all dumb, and only some guy, tweeting away and taking 50 rupees advisory is commenting. The point is, there are new areas, and only young people like me can understand this.
Of course you can. So, what have the young people like you understood? Where is the next Paytm and Zomato?
No, no, no. These next for these guys have to accept this. And every day you try to discover, but there have been many which have done very well. Forget about these Paytms or Zomato. Even car trade has done so well. PB FinTech has done well. Delivery has done well. The point is first to give them a fair chance and to understand what they are doing, and the fact that they have survived, and the fact that everybody else has been thrown out, and the fact that the customer is not going back to the old way. But also remember that none of this is relying on the overall growth of the pie and all that. It is all happening from market share shift. And one day, when you have to rely on the fact that insurance is growing or consumer is growing, then it becomes a boring stock. Right now, it is happening because accept it that this is the new way that the consumer or the corporate will react in whichever area, and it is that bet. If that doesn't resonate with you, that no, this is an unsustainable trend, then you won't believe it. I believe that all these trends are sort of set.
Absolutely. They've, I mean, changed the way you live and eat and pay, like you
Yeah, but people
said.
don't want it. People say, oh, how can this? Oh, point is, all of them have cash. All of them, not one guy is losing 1 rupee as terms of cash. And you can see their accounts, and you can see that every year there is some addition to cash. And therefore, they are okay. And it's an optionality, and they are growing 100% while we worry about some IT company increasing its guidance from 0 to 3 to 1 to 3 and get excited. Please do, not me.
Of course, it's only young guys like you who spot those trends much earlier and at the right price. That also is a very big factor. But Samir, always good chatting with you. Thank you for your time.
Thank you.
Thanks. Okay, quick break. When we come back, we track the last lap of today's trading session. It's been volatile. We're down 0.5%, but not as much as one would have thought that we would fall. So it's fairly resilient, you'd have to say.